The market is wild, unpredictable. It's like you're sailing through a storm. But what if you had a compass that always pointed the way? Benjamin Graham's The Intelligent Investor is that compass. It's not about beating the market. It's about not letting the market beat you. Let's dive into this legendary book. Lesson 1. The market is your servant, not your master. Quote, "The market is a pendulum that forever swings between unsustainable optimism and unjustified pessimism." Imagine you own a store, and every day a customer named Mr. Market comes in. Some days he's euphoric and offers crazy prices for your goods. Other days he's depressed and sells everything dirt cheap. You wouldn't let his mood swings dictate your business decisions, right? Well, the stock market is the same. Learn to use Mr. Market, not be used by him. Lesson 2. Price is what you pay. Value is what you get. Quote, "In the short run, the market is a voting machine, but in the long run, it is a weighing machine. Stocks are like contestants in a talent show. Popularity may make them rise fast, but in the end, real skill, real value, wins the game. Don't buy hype, buy substance." Lesson 3. The defensive investor versus the enterprising investor. Quote, "The intelligent investor is a realist who sells to optimists and buys from pessimists. There are two ways to invest. Defensively, like a knight in armor, focusing on safety and steady returns, or enterprisingly, like a warrior, actively searching for opportunities. Know your style and never fight battles you're not prepared for." Lesson 4. Margin of safety. Your shield against risk. Quote, "The essence of investment management is the management of risks, not the management of returns. Would you walk a tightrope without a safety net? Of course not. So why invest without a margin of safety? Buying stocks with built-in protection, like low debt and strong fundamentals, keeps you from financial freefall. The margin of safety, as defined by Benjamin Graham, is the difference between a stock's intrinsic value and its market price. It's a buffer that protects investors from errors in analysis or unexpected market drops. By buying well below intrinsic value, investors reduce risk and increase the potential for returns. Lesson 5. Speculation versus investment. Quote, "The investor's chief problem, and even his worst enemy, is likely to be himself." Are you rolling the dice or making strategic moves? Investing isn't about excitement. It's about analyzing and discipline. Know the difference between gambling and investing, and you'll win in the long run. Lesson 6. Patience is a superpower. Quote, "The intelligent investor is a patient investor. Money grows like a tree. You don't dig up your seeds every day. You let them grow. Investing rewards patience, not impatience. The best investors understand that time is their greatest ally." Lesson 7. Diversification. Don't put all your eggs in one basket. Quote, "The best way to measure your investing success is not by whether you're beating the market, but by whether you've put in place a financial plan and a behavioral discipline. Would you rather walk a tightrope or a sturdy bridge? Diversification is your bridge in investing. Spreading your investments across different assets means you won't fall if one fails. Lesson 8. Control your emotions. Control your wealth. Quote, "Individuals who cannot master their emotions are ill-suited to profit from the investment process. The market twists and turns like a mountain road. Stay calm, steer steady, and don't let fear or greed drive you off course. The best investors don't react, they strategize. The market will always be a storm, but with the intelligent investor as your guide, you'll sail through it with confidence. Remember, invest wisely, think long-term, and always keep your emotions in check. Now, go out there and invest like an intelligent investor."